Hey everyone, it's Mike Curtis. We're back with another Fog Cutter Live here at Trader's Edge. I've got Preston James, options trading veteran guru, and we've got a fun one for everyone today. Preston, lots to talk about and cover like usual.
Yep. Yep. Just today's morning so far goes along with multiple weeks that we've had going through this correction, the ups and downs. And this was kind of
Yeah,
unique. Yeah.
absolutely. So let's dive right in. Some of the big news that hit actually came Friday after the market had closed, but Moody's had come in and downgraded the US, our credit rating, and that sent kind of some shockwaves through in the after hours trading there on Friday. There's the little window of after hours trading that happens. And of course, the pre-market that starts Sunday night. The futures markets all get trading again about 6 p.m. Eastern time on Sunday and overnight into this morning. So, Preston, you see that downgrade, from an AAA rating, which is the top best rating, to that little tier down, the AA1. And why does the market kind of frown on that, or why does it send some shockwaves as we saw the futures open up lower today to start the trading for the week?
Yeah. There's a couple things. And I thought I read also that this is the third credit agency to do this. So this isn't the first. I would imagine Moody's carries more weight, which is why it kind of led with the news. You could call it a downgrade basically on the market. I mean, if it's on the US credit rating, that is the market. And a couple things. First of all, we've seen a lot of buy the dip, not the mentality. There is a buy the dip. That's what we've seen. I was on a walk during the first hour of the market, and I tuned in, and was able to see the news at that point. But from stock to stock to stock, you can see that there was a freak out and there was buying the stocks. There's a buy the dip mentality. And I think it underlines that we're on the other side of this market correction. And we're what, 4 something percent off the all-time highs.
Right.
I mean, there's a real buy the dip mentality, and today's action underlines that.
Yeah, for sure. And just to speak to that point, I mean, how much ground we've covered in the last, since those lows, right? The market lows in April, we've covered a lot of ground. So maybe we could put up just a chart of the S&P real quick. But even if we look a little more short term and we just look back to like what the last 2 weeks have done,
Oh, it's crazy.
from May 6th, where we kind of saw that swing low in there, yeah, right in that level, to where we closed on Friday, right? The S&P, I wrote it down. May 6th, we were about 5606 on the S&P, to where May 16th, just this Friday, we closed at 5958. 350 points we covered in under 2 weeks on the S&P 500. That's something like 6%. Yeah, the Moody's downgrade comes. That's going to spark some selling. But press, we talk about it all the time. They need to print a headline. They need to give a reason for why
Yeah, this
the
is
market
funny.
might
Yeah.
be selling. The fact of the matter is, we were probably due for just a little profit taking, for a little bit of selling to come in anyway when you cover 6% or around 6% in under 2 weeks, right?
No, it's a great take. I mean, you get to a point where the market's it's going to use anything for an excuse to have some profit taking. I mean, that was a big headline. I remember you walked in right after I got here. What was that main headline? Was it was doom and gloom, right?
Yeah,
You
absolutely.
remember what it was?
The
Sell America? Yeah,
Sell America's back on, and
yeah.
we're just kind of laughing because the futures trade, right? And the pre-market trading's happening, and there was a lot of selling going on. So what that does is the opening price, everything opened down, right? There was a gap down from Friday's close into today's open on that news, on that, okay, here's this Moody's downgrade. People are going to sell, sell, sell. But like you said, Preston, immediately the buying started coming back in. I mean, we gapped down, and within a half an hour, 45 minutes, that gap down just started to close and close and close to where, and we saw the NASDAQ at about the 1 hour mark, it was almost back to a green positive number
Yeah.
compared to Friday's close. So yeah, that buy the dip was on. That headline that we were joking about was completely wrong.
America. Yeah.
The sell America. So yeah, it speaks to the tailwinds kind of behind the market at this point, right? That hey, we saw this gap down, we saw some negative news, the market's covered a lot of ground, and as soon as it looked like things were on sale, there was that dip. Some of the bulls and the buyers just came rushing right in.
No, it's true. To be fair, you don't see news every day about the whole U.S. economy getting downgraded or the credit of the United States.
Right.
And there's a bill pending that's very big. I mean, Doge has been loose, saving money. I mean, they probably need to be relevant. I mean, every so often, you've got to do an upgrade or downgrade if you're Moody's. I'm sure they love the headline attention. But maybe even more than that, it kind of helps maybe frame a week, Mike, where we've got, let's talk about what's coming this week. I mean, there's some pretty compelling earnings announcements from compelling companies.
Mm-hmm.
And then I think the Fed chairman's going to be speaking again. Do you want to highlight some of that?
Yeah, for sure. So what's on tap? We always like to look out what's coming up this week, a few things that could bring volatility to the market, that could cause, like we said, if we're really stretched, sometimes people are looking for an excuse to just take some profits and for some of that selling to come in. So having an understanding of what's on tap on the economic calendar, on the earnings calendar, is a super important part of being a trader and investor. So yeah, what I wrote down, and again, we're kind of through the big wave of the earnings season, right? We're kind of on the tail end of that, but a couple big ones still. So tomorrow morning, we've got Home Depot, which of course could give us an insight on just consumer spending. We've got Palo Alto Networks tomorrow after the close. PANW is the Palo Alto
I'll
Network.
add one to that. Toll Brothers announces after the close on Tuesday.
Mm-hmm.
And they're just, they're the luxury, they're the real 800-pound gorilla with home building. And just look what a beating that whole industry's taken. And I think, anyway, it's just interesting to watch. And of course, I bring it up because it has weekly options.
Right.
All these big leaders, Palo and Home Depot, these are ones you really don't have to question if they have weekly options. Yes, they do. And I just add Toll Brothers to that.
Yeah, that's a great one to keep an eye on, because a lot of this can drive, of course, the economy is driven by consumer spending, new homes, home building. And then Wednesday morning, two other big key companies that can give a glimpse into retail spending, Target and TJ Maxx.
Oh my gosh, I'm glad you mentioned
Both
the T.
report on Wednesday morning.
And I'll add to that, well, I'll
TJ.
just say it. It's a fact, right? I mean, both of those names, I would imagine the overwhelming majority of TJ Maxx and Target shoppers are women. I mean, for style, I don't know. To me, like a TJ Maxx, if you just look at the long term, it's undefeated. I mean, look at this. Look as
Look
we're
at that trend.
talking.
Yeah.
I mean, wasn't there a bear market and some corrections in there? I just don't see them. And a pandemic. I mean, it's undefeated. And it's fun. Both of those have weeklies too. I love, anyway.
Yeah, those are great ones to watch. So, Preston, maybe on that topic of earnings, why don't we usually jump into a new position on a stock, even though that chart on TJX, it's been one of the leaders, one of the performers coming out of this correction over time. It's just a great trend. If that's one you were looking to trade, why don't you jump into that on a Monday or a Tuesday when earnings are coming out Wednesday morning?
Yeah, that's always a good point. I mean, when we have a strategy like the money press, I mean, 4 times a year, and I'm glad for this. I mean, make no mistake, I'm glad our markets are just envied, right? We're transparent. There's always can be fraud and so forth. But I mean, to make the S&P 500, to get to the level of some of these companies, the scrutiny is just absolutely insane. I mean, the world beats a path to be listed on our market. So with that said, 4 times a year, companies are required to announce earnings. And we just don't want to do strategies with some days headed into the earnings. It's an unknown, both on the positive and the negative side. And not only what they announced for the past, but when they take that lectern, that podium to talk about a future going forward, the guidance, that's all happening for these companies. And we can be patient and let that come out. And the cool thing with the money press is we can go in and get 12 weeks of unfettered non-earnings time. All we have to do is wait for the earnings to come out. So that's the main reason.
Yep, that's great. And that's our sweet spot, kind of in between those earnings. If it sets up great after earnings, that's when we love within a week or two following that earnings announcement. It's kind of a sweet spot where we love to get a new money press trade run. It doesn't have to be. It could be, 2 months before the next earnings report. But yeah, that's a sweet spot. And then also what's on tap for this week. We talked about the earnings. There's quite a few Federal Reserve speeches, these different officials and kind of the regional federal offices. So New York Fed is speaking today. I think they spoke already this morning, a couple tomorrow. So there's a few of those on tap that, again, if the market's looking for a reason to go into a little profit taking mode, all they need to do is hear a sentence or two from one of those speeches, and it can spark that. So keep it in mind, keep it on tap. And we've got a leading economic indicator that was also announced this morning. So the markets digest some of that. And then I know we also have some e-commerce retail sales figures that are coming out that can kind of influence the sentiment. So again, with TJ Maxx, Target, Home Depot, I think Lowe's is also this week. Some information, some data coming out on the consumer spending front this week.
That'll be interesting. I do want to add one more. As long as we're talking, I brought up women. I mean, the studies are that, I don't know what the exact figure is, but they spend a lot of their disposable income. And if we could pull up a 1-year chart on DECK, that's the ticker symbol for Decker Outdoor. They own like Uggs. And one thing that I just find really interesting, well, this one you can just tell, it basically took a fall out of the ugly tree and hit every branch.
Mm-hmm.
I mean, this does not happen that often. So, yes, there was a market correction, but this stock really has been taken apart. And it's almost had its own bear market on top of the market correction. Well, here they come to a week where they announce earnings. And I just pay extra attention to names like this. Does it have weeklies? Yes. Now, we're not doing anything with it right now. We're going to wait for the earnings to come out. But man, if it can clear a hurdle, if it can get a surprise factor, if it can spark this thing, this has a lot of ground to recover. And it usually does that, not this stock, but stocks in general. They don't do it all of a sudden. They've kind of had a broken leg here. I mean, there's some time to heal. But the money press could be, I'm not saying right now, but it could be a killer, awesome strategy on here. And then there's 2 more, Snowflake and Workday, both announced earnings this week. And that's completely different from women in retail spending. This is more in the cloud space. And anyway, very compelling names this week announcing earnings.
Yeah, that's awesome. And a few that could be closer that I've kind of had an eye on. We're always thinking money press. We're thinking stocks with weekly options where, the money press, if you're not familiar with it, think of a strategy kind of like a vacation rental where you're getting a week by week income, right? You vacation rental property, you rent it out a week at a time or whatever it might be, and you just get a new chunk of income potential rolling in. So if we look at Gilead Sciences, GILD, this is one I've had just my eye on for a potential money press. P, I don't know if you've looked at this one recently.
Not recently.
The
Not
chart
recently, meaning not in the last like 3 or 4 weeks. Other recently could be I haven't looked at it in a couple of years, but yeah.
Yeah, again, and one thing that we love to do is sometimes these tech stocks get a lot of the headlines, they get a lot of the attention, they cover a lot of ground. And so finding some positions to peel away from that just a little bit to just diversify, right? So GILD is one, AT&T is another one that's just been really consistent, kind of steady, that look like they could be setting up nicely for some money press opportunity. Again, if you're looking for something to diversify a little bit, so Gilead is GILD, the ticker. AT&T, the ticker symbol is just T. What I like about AT&T, it's a little lower price stock, not super volatile. So if you're just getting started with the money press, it might be a good kind of training wheels one to go take a peek at. Just a little less volatile, a little less behind it as far as management and the stock bouncing around. So those are a couple that you could go take a peek at. And of course, if you're a WoW insider, anytime we jump on a new position, we share those things with our WoW insiders, of course. So great way to tap into actually the live trades that we're placing and putting on. So anything else on that front,
Absolutely.
P, as far as trade talk,
You
anything you're
know,
looking at?
I knew this one would be jam packed. I do want to maybe next week. I attended this Sohn conference in New York City, and I think we're all swimming in ticker symbols right now. And this isn't like super timely. Oh my gosh, you've got to know what they said. If it's more spread out, but I do want to share while it's fresh on my mind with on the FogCutter. I'll just reserve it for Monday where we can kind of get into some of that.
Yeah.
Just wanted to have some really killer insights that I want to share here. So, but
Yeah.
I think we'll do it next Monday.
No, and some brilliant hedge fund traders, people managing and trading billions of dollars, right? We're at that conference sharing ideas. So
Yeah,
lots of great insights, and not just someone's opinion where they're just throwing a noodle at the wall, right? These are people that are putting tens of millions of dollars or maybe hundreds of millions of dollars
yeah,
behind an investment idea. So I'm excited to hear a
yeah.
little more about that and share that with the folks.
One little wrinkle about that of why I think this one's extra special. It was the 30th annual meetup, and what's cool behind the scenes is it started because a hedge fund, his trader, pardon me, his brother, they were both in Wall Street, had passed away from cancer in his 30s, and they decided like, what can we do, to just get past this? They're all distraught, and they're like, well, let's have a conference and let's donate whatever it makes to the memory of your brother. So, and I say that, and it stuck, it worked, and they're like, let's invite different managers to come in and drop something they're really passionate about, a new trade. And it seems to take it away from, in a way, 'cause the presenters, it seemed to take away when you're doing it for a cause. And I've just noticed this over the years in my own trading. When I'm doing like an account, well, it's great to make money, great. Well, but when you kind of have a cause behind it, or if there's a certain account, like I've got some like Roth IRAs for my kids and different accounts out there, that when I picture them, it's for them. It seems like I get a little sharper when there's a cause behind it. And this had the vibe of that. And I'm just anxious to share some of this stuff. It just seemed like a different tone
Yeah.
than your normal, hey, here's a chart and here's why it's cool. No, it was a lot deeper than that. There's a real cause behind it.
Love it. Well, that's
Yeah,
a great cliffhanger for next week. So make
totally.
sure you tune in, catch next week. We'll talk more about that. And Preston, as we wrap this one up, we did have a question roll in. So kind of from our mailbag here. And it was really just about this downgrade. And the question was, how should I adjust my trading strategy in light of this Moody's downgrade? And I'll speak to that real quick, Preston, and
Yeah,
you can share some thoughts too. But last week, as we saw the market just continue to cover ground, I, in my personal trading, came in and started adjusting my put protection higher, right? So what is put protection? Well, it covers you to the downside, right? It's an options contract. If you're new to the world of options trading, think of owning a share of stock at like $100 a share, right? You buy the stock. You can buy an insurance policy at 95. Right? You can buy an insurance policy to where the most you could ever lose on that stock is $5, and you got to pay for the policy just like any insurance. And then, of course, on our money press strategy, we have this put protection built in inside of every money press that we trade. So when the market covers a lot of ground, that insurance policy gets a little bit farther and farther away. So at points we want to ratchet that back up again. We want to get our deductible, if you will, tightened back up. So last week, just because of all this strength, I started tightening the puts up. I started adjusting those higher on stocks that I own, and I have put protection on money press trades. So when we cover a lot of ground, we can tighten that put protection up. And then if we come into situations where we see profit taking or we see the market move lower, maybe for a few hours or maybe for a few weeks, that put protection can cover the trades as we go through maybe some of that choppy pullback drop. So what does that have to do with the credit rating change? Well, there's always going to be surprise headlines. There's always going to be choppy, news-driven swings in the market. So for me, when we cover a lot of ground in a short period of time, it's a great time to tighten up your protection, right? Compare it to something that you're maybe familiar with.
It's a great point.
Let's say your home value, you bought a home for $500,000, and a few years later, the market's just surged. And that's similar to what we've seen here in Utah, right? Over the last few years and probably a lot of places across the country. Now, if that home is worth $900,000, you got to change your insurance policy, right? What used to be, if a fire hits or something tragic happens and you got to rebuild your home, what used to maybe cost $400,000 or $500,000 now might cost $700,000 or $800,000. So you got to adjust that insurance policy as you see the home appreciate. So whether it's a money press, whether it's stock you own, we run into that same situation where if we see a lot of appreciation, sometimes we got to ratchet that put protection back up. So in times like these, I like to be on top of that. So anything, Preston, that you would add to that, just how you might adjust in the face of a credit rating downgrade or just the current market conditions we're in?
Yeah, I mean, just going along with what you said, and when a stock is really covering a lot of ground, and you up there's not a lot of fear when stocks are gaining ground day after day after day. So the options become less expensive. So just to your point, if you are able to increase that put protection, it costs very cheap. And then if you enter in some waters, which usually is around the corner, right, where now there's some new fear, options get more expensive because there's more anxiety. There's more, oh my gosh, here we are again. And so you're able to not only increase it, but it costs you less. And it just feels good once options explode in value again. And you adjusted cheaply. And I know we're talking here that there's not really a visual for that, but that's maybe a little next level stuff. But
sure.
That's fine.
That's a good example. Like, let's throw a chart of MicroStrategy, MSTR. This is one where I hold shares of stock. So you look at this, 100 shares of stock is about a $41,000 investment. And for me to tighten up my puts last week cost me maybe $300, to go from a lower strike and tighten those up. So you think about a $40,000 investment of 100 shares, and it might cost you a few $100 to increase the insurance policy on that. It just, like you said, Preston, it's just really easy to buy into spending some money that way.
And of course, with options, you can sell a call option on this position and generate the money to buy your puts. So that's maybe we leave it right there on a little mind blower right there.
Yeah,
How
I
about
love it.
buying insurance on your home or your car and having some other entity pay for it that's not out of your pocket? Pretty
Exactly.
crazy.
I love it. So yeah, great stuff. So tune in next week. We'll talk a little bit more. I know there's a little bit of Bitcoin discussion that might swerve into that, a few other trade ideas. So we got a fun one next week already brewing. So thanks for being with us today. Like always, things can hit. Be prepared. Trade with the markets as you see the price action volume change. You can adjust. Avoid the "Sell America" headline fears, even though that impacted the futures for maybe about an hour this morning. That buy the dip came in pretty quick. So, any parting thoughts from you, Preston, before we
No,
sign this
just
off?
bored headline writers. They haven't been able to write anything. I mean, I would just sit there and if I saw my headline I wrote blew up, I mean, I don't know. People, they want to matter. Everyone wants to be relevant, including Moody's, the headline writers. I would just say we love these questions. Keep the questions coming in. We'd love to take these every week on the FogCutter Live.
Absolutely. All right. Well, we'll sign this one off. Thanks, Preston.
All
Have a
right,
great
take
week,
care.
everyone.